Hey everyone, I'm Robert Leonard from the Investors Podcast Network. In this video, we are going to go over the intrinsic value assessment of Whirlpool Corporation that you can see on the screen here. This is the companion video to this intrinsic value assessment. We're going to use this video to walk through how I get the data for this article, how I did my research, and how we were able to come up with some of the information in this article. So hopefully this video will be able to put some context and visual aspects to this article here that's just words really. So this is what we're going to be going over here. This is Whirlpool Corporation. Again, we write these intrinsic value assessments every 2 weeks. So every 2 weeks, you can check out the investorspodcast.com for brand new intrinsic value assessments, which is deep dives, research reports on new companies, their intrinsic value, and some information about the companies themselves. When we started writing these a few weeks back, the first one that I ever wrote was about Square. And I knew that I was going to write that one as the first one because Square is one of my largest holdings. And so I figured I would kick off the intrinsic value assessments with Square. But when it came to the last intrinsic value assessment and also this one, I didn't really have anything in mind in terms of what company I wanted to analyze or anywhere to really start. I didn't have a watch list or anything. So I basically was starting from scratch. And what's fantastic about the TIP tool is there is a filter option, which you can see on the screen here. And that's where I was able to get this idea from. And so when you log in, it'll bring you to your portfolio here. But what I like to do is go to the filter, and then you're going to see there are three options. One is for a large cap, one is for mid cap, and one is for small cap. For now, I'm going to talk about large cap companies for the next few weeks at least. I might get into some mid cap and small cap companies eventually, but I figured I'd start with large cap as that'll probably help the most people as people are most familiar with large caps for the most part. And so keeping in with one of Warren Buffett's most important principles is that you must invest within your circle of competence. And so the easiest way for me to decide if a company is in my circle of competence is based on the sector. So this is what I look at first. And I understand the financial services sector, which is probably the most common out of this whole list. You can see financial services just in this screen alone. The majority of these are financial services. I don't feel like covering a financial services company right now. I might in the future, but I didn't want to dive into financial services. And then from there, I needed to pick a sector that was within my circle of competence. And so as I'm going through this list, I don't really understand healthcare that well, so I didn't want to cover healthcare. I do understand technology, and so Norton LifeLock could be one. I do understand consumer cyclical, I think, depending on the company. And you can see just continue financial services. I did look into Norton LifeLock. It wasn't one that I was interested in right now, so I skipped that one. And I basically continued to go through this list till I found a sector that I knew that I could understand. And then I would look at the company and say, okay, do I know anything about this company? Do I have any advantage or do I know much about this company and it might help my research? And so in one of our recent newsletters, I wrote about Peter Lynch's investment strategy where he recommends investing in companies that you know, and that could give you an advantage over Wall Street. And so that's what I'm looking for as I go through this. I'm looking at the sector and then the company. One of the first ones was technology, eBay. I don't think I have an advantage there. I know eBay, and we've actually written an intrinsic value assessment not that long ago on eBay, so I skipped that one. This is consumer cyclical. I've never heard of Omnicom Group, so I probably don't know a ton about that company. Same with HP. I think we've already covered that one as well, so I wasn't looking to dive into that one. I kept going through basically, and then I got down to this one here, consumer cyclical and Whirlpool Corp. That one actually stuck out to me, and I decided to analyze that one this week for a few reasons. One, because it's in my circle of competence, and two, I actually have quite a bit of familiarity with it. So similar to the last video where we covered AutoZone, I had been a customer of AutoZone in the past. I've been a customer of Whirlpool in the past. So I figured, why don't we analyze this company? And so that's what I dove into. Being a real estate investor and also a homeowner, I've dealt with home appliances quite a bit. And my parents are actually redoing their kitchen right now. They're doing a remodel at their house. And I know my dad wants all Whirlpool appliances in his kitchen. So I thought that this would be a really good pick for me. And so you don't always have to come up with your investment ideas this way, but I know a lot of people wonder how people come up with investment ideas. And so I wanted to quickly walk through how I use the TIP finance tool and the filter function to come up with some ideas and kind of how I think about things. And then once I've gotten past the circle of competence and the company itself, I look at some of these other metrics and you can see that the TIP multiple is 11. The median multiple is 12. It's got a green momentum and the potential yield's just over 9%. So all three of those things are pretty good. Again, I'm not going to make an investment decision based solely on that, but it gives me some high level information to tell me whether I want to dive in deeper or not. And so from there, I went into Whirlpool Corp by clicking on it. And here on the fundamentals tab for Whirlpool Corp, if you just click on it in the filter function where we just were, it'll pop up this screen. It'll tell you the market cap, stock price, momentum status, 52-week high and low, dividend yield, all kinds of information, and the stock chart. You scroll down, you can get our intrinsic value calculator right here, the financials, key ratios for profitability, growth, cash flow, all kinds of great financial information. And I use this calculator here to come up with the intrinsic value. So we'll walk through that in just a second. But I want to mention that at the time of the writing of the article, Whirlpool's market cap was about $13.27 billion, and its revenues and cash flows for the 2020 fiscal year were $19.5 billion and $1.1 billion respectively. When I wrote the article, it was trading at about $211 with a 52-week low of $64 and a 52-week high of $214. And so in the article, what we did is we analyzed the company and tried to decide at today's price of $211, is it undervalued? Is there a value pick here that we might be able to beat the market with? What I started to do was analyze its cash flows, and we went into the intrinsic value calculator. One of the great features about the intrinsic value calculator on TIP Finance is that it saves your data from last time. So when you open this, if you're new to a company, you got to input your own data here for the input variables. So your upper band, growth percentages, and likelihoods, you got to put that for all three situations. But once you do that once and you go back, it'll save it. So this is already saved from the last time that I used this. What I did was I put in a 3% growth rate with a 20% likelihood, 0% growth rate with a 60% likelihood, and a negative 5% growth rate with a 20% likelihood. And the tool automatically modeled this out for me. It showed me that at today's price, it's going to expected to return about 6.66%. What I also love about the tool is that you can change this. So we're talking about buying at 211, which is the price when I wrote the article. It's just under 7% return. But this being a cyclical company, we might see it pull back a little bit. So what if we could buy it at $150? What would our potential return be? We could see it goes up quite a bit to almost 11%. What if we could get it for like 125? Now we're looking at a 13% return. And of course, you got to keep in mind that that's with no deterioration in the business. If the stock price falls, but the business is still doing well, this is what your potential returns could be. And so I created my growth numbers and my likelihood percentages. You can create these yourself. You have to do your analysis and then come up with these yourself. But I based mine basically off of historical data. And then I also analyzed the business and also the industry and where I think we might be in the cycle. And I assigned my growth rates and likelihoods based on that data. This is what I felt comfortable with in analyzing the company. If you go too optimistic with your input variables, so let's say we put 10% here instead of 3, and then we put 5% here and then 0 here. Now, at today's price, instead of 6%, we're looking at 11% return. At just under 11%, you might be like, wow, that's a great investment. But what you need to remember is that just because you put input data here doesn't mean that that's actually what's going to happen. So you need to be realistic with this. And I tend to be a little bit conservative. I mention this because when I was earlier on in my investing career, I made this mistake. I thought that just because I put numbers into my model or my intrinsic value calculator, that they would be true. And that's not always what happens, as many of you probably know. And so I had a lot of positions that lost a little bit of money because I was purely being too optimistic with my input variables. So be realistic and just realize that this is just an expected rate of return. It's not necessarily guaranteed. And I tend to be a little bit conservative with my numbers because of that exact reason. And so we can exit this here. And like I mentioned before, if I leave this and I come back, it's going to ask me if I want to save it. Do you want to save the changes that you've made? You could say yes or no. That way, if you come back to Whirlpool in the future and you wonder what you used for your model, it'll be saved for you automatically. So I love that feature of the TIP Finance tool. I'm going to leave this not saved this time because we changed it. I wanted to go back to what we already had, because if I ever come back here, I wanted to know what I had in my analysis to begin with. And so from there, one of my other concerns with value picks, especially with a cyclical company like Whirlpool, and trying to determine if a company is undervalued, is its momentum. Again, going back to some of the mistakes I made when I was first getting started investing, I would often catch a falling knife. I would think that quantitatively the company looked undervalued, so I thought that there was an opportunity there. But what I didn't consider until I learned this from Preston and Stig was that you can couple momentum with value to find companies that are undervalued, but maybe it's not the right time to buy because the momentum doesn't tell you it's a buy signal. And so what I've started to do is look for undervalued companies, but also look at the momentum. So what I did with Whirlpool is I click on this green circle here, which is the momentum status, and it's going to bring you to the TIP momentum feature. And this is going to help me kind of ease my concerns about potentially buying into a falling knife or a value trap, some people would call it. So when you buy a company that seems undervalued, it can still go down more and more and more. And so that would be a value trap or a falling knife. So what the momentum tool does is it helps you avoid those situations. It's not guaranteed that you will avoid them, but it helps. And so being this in a green status, it's been in a green status for a long time. Looks like it's been about 9 months or so. If I was interested in potentially starting a position in Whirlpool, I would feel relatively confident that I wasn't buying into a falling knife because the momentum status has been green for so long and its currently momentum is green. Whereas if it was red, like it had been back here, I would be a little bit concerned that I might be buying into a falling knife situation. And so I'd potentially consider not looking at starting a position now. I would wait a little while until the momentum status was green, and then I would start to consider the position. Again, that's because I've bought into falling knife situations in the past. It tends to be very common for value investors because typically a company is undervalued or appears cheap for some reason. Typically, they're going through some sort of distress, and oftentimes there's a reason why the company is trading cheap. So they can trade lower. And if that's going to happen, you want to try and avoid that. We're never going to completely buy the bottom, but this momentum tool here can help you avoid buying when something has a good chance statistically based on data to continue to fall. That was my problem, was the indicators were clear that there was negative momentum and I shouldn't have started a position yet. I should have waited till the negative momentum reversed and then I should have started a position. So this will help you avoid that situation. And then what's great is if you decide that you do want to take a position in Whirlpool, then you can add it to your TIP portfolio, which you can just click on the portfolio feature here, and you can add the position to your portfolio. So we'll go ahead, click add to portfolio, and the company ticker is WHR. So we'll put that in and then click on Whirlpool. We're just going to say we bought 100 shares. You could put in the date that you purchased it. If you're adding positions that you've already owned, you can just go back and add the date. Or if you're going to buy it today, you could add today's date. And then you could put in the price at which you bought it. We started to analyze it at 211. And if you want to add more positions than just this one, click add more. Or if you're done, you can just click complete entry. And then you can see Whirlpool right here got added to my portfolio at 100 shares. And we can see what percentage of my portfolio it is, what the performance has been since I bought it, the volatility, momentum status. You can set a momentum stop, or it tells us what the momentum stop is automatically so that you can set that in your head. And then it tells you what the intrinsic value, what your expected return might be based on your calculations. And if you want to adjust the calculations or add more growth or take away some growth, you can simply click on the calculator right here and add it. And then one of my favorite features is the email momentum notification. So if the momentum changes, we talked a lot about that a few minutes ago. If the momentum changes for these positions, specifically Whirlpool, if you have this on, it's going to email you when the momentum status changes. You can turn that on or off, but I love having that on for all of my positions so that I know if something's changed. Then once you've added all your positions to your portfolio, we have your analyzed realized performance. I don't have any data yet because I haven't closed any of these positions. You have your unrealized performance, which is based on positions that you haven't sold yet in your portfolio above. And you have another calculation for your performance unrealized since your base is here. And then you also have your correlation table. This helps you think about diversification and tell you how correlated your portfolio is. So we could take a look at Whirlpool here and we can see how correlated it is to some of our other positions. So if we look at Whirlpool and Apple, which is Apple's here, Whirlpool's here, we can see that there's a 0.31 correlation between these two, which means they're not super correlated. You could see with Green Dot, they're almost zero correlation at all. There's actually a little bit of negative correlation, but pretty much no correlation whatsoever. And so you could do that. You can compare all of your positions to one another so that you can see how correlated they are and help you with diversification. And then again, you have another watch list here where you can add any watch list stocks that you have, and you could add stock price notifications. So you can have email notifications for the momentum on anything on your watch list and things that you have a stock price notification. So if you might want to buy Whirlpool, but you don't want to buy at 211 like it is today, you could set the buy at 125. I already had Whirlpool added here. So you can click add company ticker, WHR. Say we want to buy at 125 and we'll sell at 215, complete the entry. It's going to tell me that it already exists, so that's fine. We'll go ahead and add it here. And then if you turn this on, you'll have email stock price notifications on. So anytime this hits 125, you'll get an email notification. If it goes to 215, you'll also get a notification. That'll help you know when you might want to buy or sell. All right, so that's going to wrap up this companion video for the Whirlpool Corporation Intrinsic Value Assessment. As you go through this article, you can see there are screenshots, how I got the stock chart here. You can see where I found the stock in the filtered feature. You can see the cash flows, the intrinsic value calculator, and all the other ways that I got data for this article. You can see how we analyze the momentum. And you can also see how we got all of the financial data under the fundamentals tab here. We got all of the financial data that you need to analyze here as well. I hope you guys enjoyed this video. If you enjoyed the video and you want to see more, make sure you subscribe, hit the bell button so you get notified every time we have a video. Want to get these intrinsic value assessments directly to your inbox? We send out a newsletter every week, and every other newsletter is an intrinsic value assessment. We send these out every 2 weeks. So if you're interested in getting more intrinsic value assessments, you can sign up for the newsletter at theinvestorspodcast.com, and I will see you guys again in 2 weeks. Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on our next podcast episode and new investing resources. What are your takeaways and thoughts about this discussion? Let us know in the comments section below.